think did it work?
It did.
Perfect.
Okay, should be seeing a screen that says budgets on it, and that's about it at this point. Okay. So I'll just sort of establish my credentials a little bit. And as you can see by my picture, if you see it, it's starting to get a little bit lighter of color on the top of the head. I am a CPA. I have worked in not-for-profit and various things and for-profit. But in not-for-profit pretty much from, when did I start with CNIB? 1986, I guess it was. So that also shows why the hair is getting a little silverish. But I have done a lot of work with this and a lot of work with boards. And hopefully in the next hour or so, I can share a few things around the process of a budget and what they look like, what you should be looking for. As Colleen mentioned, don't hesitate to ask a specific question. We may or may not be able to get that done during the session today, but we can take it offline and go back and forth if we have to. Because I don't mind answering some specific things. What I hope to do is just show you what these things look like, kind of the things around it, why we do it, some of those sorts of stuff and things like that. And this set of slides is basically a microcosm of the program that Colleen was talking about in NSLI 350. They do a whole module on budgeting, and it's one of the major modules in the course. And it takes them about a month to do that. So you can see in an hour and a half, we're not going to give this justice. That said, I hopefully can get a few pearls of wisdom out there as to what it's about, where it comes from, what kinds of things you need to do, and what to be looking for. Okay. So we'll start out by looking a bit at accounting to begin with. And of course, there's two different types of users out there, just so that people get things straight and where we put budgeting into. So accounting identifies and records economic events, and that's what it does, okay? And then they're also in the communication business, and that's one of the major hallmarks of a budget. Is one of the things that it does is it communicates things. Now, I'll go through that a bit more when we get there, but basically, budgets have two processes that they actually need to accomplish. Now, there's two broad categories of users out there, which is internal and external. Of course, an internal user is somebody that works for the organization. Okay, they're in the government organization, the not-for-profit, the company, whatever it is. Okay, this part is not really unique to not-for-profit by any stretch of the imagination. And then, of course, there's the external users, which by definition don't work for the company. And this is, of course, investors, lenders, creditors, customers, employees, people that have an interest in what you're doing for one reason or another, be that your clients, anything. Okay. Now, in the not-for-profit world, you don't see a lot of taxing authority and regulators, but some not-for-profits do sell things. So you do get GST and PST. So yeah, they generally get their mitts in there somehow or another. And even in the not-for-profit world, if you are a charity, you have the T3010, okay, which is the information return that you have to do every year for the federal government to sustain your charitable status. And it outlines how much you spent on what you actually said your charity was going to do, and you can't spend X more than X amount on administration, et cetera, et cetera. And even in the not-for-profit world, the not-for-profit companies don't have to do a full tax return, but they do have to do a report for the federal government. So the government is an external user that gets his mitts in here. Okay, now typically the internal users need more and different information than the external users, and both groups need subdivision by program area and detail to a certain degree. And the net result of all that is you get a different statement out of the accounting system for different people. And if you want to go far enough into accounting, I just recently finished. Well, I shouldn't say I'm finished yet because I still got some exams to mark, but I just recently finished doing a management accounting course for the University of Regina in the evenings. And that kind of shows you there's two different branches. There's actually three different branches of accounting out there. One is the actual financial accounting that we're all familiar with, that us bean counters do. And then there's the management side, which is more internal and it's more analysis. It takes the financial statement and tears it to pieces. Okay. And I would suspect that's where most of the people that are on this call are at. They're in this management accounting area, which is where the budgets fit in. All right. And then the third area, of course, is finance itself, which, of course, is a discipline unto itself. And it's everything from investments to RRSPs to you name it. Okay. And not-for-profits do get involved in that, but it's not usually their highlight. Okay. Most not-for-profits that I've ever worked for or charities that I've ever been in, we're always $1 short and a day late. And we don't have a whole pile of extra money that we have to worry about putting into something that we're going to invest in. And so we're not worried about what the stock market does all that much. Okay. So finance is not something that you get 100% into. That said, certain special projects, once in a while that happens. Okay. If you've got a capital project going where you're going to do a building or something like that, then chances are it takes you 2 or a couple of 3 years to make the money, to have enough in place so that you can move forward with the project. And in that case, as you get the donations, you want to put them into something then that would be there. So really, not for profit, the accounting and budgeting process and the finance process may have different focuses, but it's not particularly different from that in the for-profit world. And of course, the difference in the not-for-profit world is the philanthropic side of things. Most of the time, the for-profit world has one definition of what their goal is. It's called make money. Okay, period. End of line, done. Okay, about all they get to debate about is how much money you get to make. It's not that it would be a very small amount or a very big amount, but whatever it happens to be. And the not-for-profit world, of course, their reason for being is usually whatever it is they're actually doing. Okay, so if they're providing housing services or children's programs or programs on the health field, like Cancer Society, CNIB, who I worked for many years ago, all of those types of charities have a specific thing that is their focus in life. They're trying to mediate something or mitigate something in society as a whole, usually, and that's what drives them. That said, they still have to pay the bills and they still have to do all of those things. So really, in all organizations, you really have financing, investing, and an operating activity. Okay. And I'm going to define those for you in a little broader terms than what you're probably thinking. Okay. Operating, maybe not so much. All right. Operations, everybody knows from day to day, it's the revenue coming in, it's the expenses going out, it's managing the people, it's managing the programs, it's looking at the statistics on the programs, all those things that happen on a day-to-day basis. Okay. So investing and financing, though, I'm going to go into a little bit broader. Give me just a minute while I shut something off here for the time being, so it doesn't bug us. Anyway, okay, in financing and investing, though, I'm going to go a little bit different track. And my point here is that all three of these activities turn into different budgets at some point in time. Okay, so financing is obtaining and repaying funds in operation of the business. Okay, even not-for-profits do borrowing. Again, it could be for a major project like a building or something like that. Or even if it's seasonality of your program. Okay, it can happen that your program runs heavily from September, if it's a children's program that's an after-school program, for example, before and after school or something, then it runs pretty heavy from September to mid-December, and then picks up again in January and goes again to June. But during the summer, not much coming in. Okay, so, and not much going out either, but there is a seasonality to that. All right, or conversely, if it's a program where you're looking after the students when they're not in school, then you have a really heavy July and August, and the rest of your year isn't so big. So you get seasonality. Now, where I'm going with this is that usually your revenue stream follows that seasonality. And you may have some certain fixed amount of costs that you have to maintain throughout the year, staff or whatever it happens to be. And what happens is that you have more money going out in certain months than you have coming in. So what you have to do is either have a little nest egg and sitting aside that you can live on for a few months, which is usually part of what people do. Or the other part of it is, of course, people can have bank indebtedness. So what happens is that you go and you negotiate with your banking institution that'll let you go into overdraft for a couple of months or 3 months and then pay it back when your cash flow comes back. Now, again, this is an important piece of this because this is covered in cash budgeting. And cash budgeting to me is the one out of all of the budgets that gets the short shrift. Okay, it's the one that probably we should be spending more time on, and I'm as guilty as anybody else, I have to admit that. We do a lot of it where I work here, but we're not quite as diligent as I'd like to see us. But a lot of this happens kind of by the seat of our pants a little bit. But when we get to the end of this, I'm going to show you what cash budgeting is, and a lot of it's around this financing activities. And we should be paying attention probably more to it than we actually are. And actually made the students that took the NSLI 350 do a cash budget. So they now know my feelings. There's another 15 people in the world now that know my feelings. Okay, now investing activities. Now this is where I'm getting to a little different definition from what you probably look at. I mean, when we think about investing, personally, we're going out to buy a GSE if we've got a little spare coin. Okay, or we're going out to buy an RRSP if we think we're going to retire someday. I keep saying to myself that I should be retired, but I'm actually only tired, so I just have to keep going till I can get the re part sorted out. But anyway, that aside, this definition of investing is broader because in most organizations, you're going to have some long-lived assets. Now, this could be buildings, it can be vehicles, it can be computers. It's something that's going to last the organization for more than a year in the accounting system. Okay, so again, property, plant, and equipment, all of those sorts of things. It does include investments, all right? If you do happen to have a little spare cash and you put it into treasury bills or put it into a GIC or something like that as a not-for-profit organization, then you will have investments on your balance sheet. But it's really not likely that most organizations are going to have a lot of that. The organizations that do, and I go back again, they may or may not have this anymore because it has been almost 30 years since I worked for Canadian National Institute for the Blind. However, at that time, what they did was they had bequests come in from people that had died. And what happened is they put all those bequests in their rainy day fund. And you were allowed to do was you had to put the bequest in there. Now, the board of directors could take out some money for special projects and things like that. But the idea is that they would build this bequest fund as an endowment fund. So what happened is that you take the proceeds of the endowment fund and use those in your operations to sustain long-term operations and leave the fund alone. So of course, in that situation, the actual investments and the financing around that became fairly important because of course, if you wanted to maximize that without giving too much risk, you couldn't afford to have the endowment fund go west on the stock market That said, you wanted to enhance it as much as you possibly could so that you could get enough money into the organization to run it. Now, this is part of capital budgeting, but it's also a little bit part of the cash flow as well. Now, the operating activities we're all familiar with. This is, of course, the operational budget, again, part of the cash budget, but it's revenues from whatever source we get, grants, donations, cats, bats, rats, elephants, whatever we get it from. All of our expenses, which run the gauntlet from salaries to program expenses to you name it. And then some of the related accounts receivable and accounts payable, if it's applicable on your balance sheet, are also operating activities, although we don't usually budget for those sorts of things. So in terms of accounting then, that's the three kinds of things that are out there. And what we're going to do is do budgets based on those activities. Now, the financing and the pardon me, investing activities are covered off on the balance. What probably most of you know is the balance sheet. It's now actually called the statement of financial position. That's a term that came out of the International Financial Standards, but has now have been adopted pretty much universally. But anyway, we know those as assets, and we know those as investments and loans on the statement of financial position. Whereas the operating activities we know as revenues and expenses on the income statement. And of course, what we're going to do with the budget is actually replicate those two statements or parts of those two statements. And what we're going to do is make a plan for what we want those things to look like. So are there any questions before we dive into the budgets as is?
Again, you can feel free to turn on your mic or pop it in the chat, whatever works for you.
Whatever works.
We can just give it a minute because sometimes it takes people a minute, but if not, we can keep going.
Well, that's what I was going to do, is just give it a second or two, and then the time, no news being good news, we'll move on.
Yeah, exactly. Thank you. Oh, we've got something in the chat here. Oh, yes, I was thinking this too. It's from Adam at the Community Foundation. The Community Foundation now has assets under administration that allows charities to access the pension plan, a diverse pension plan. And yes, I've been thinking about this, Adam. Thank you for putting it in the chat. So there's lots of really great opportunities for organizations.
Often it's not. The pension funds are, well, what you end up doing with a pension fund often is not, and I don't know whether the Community Foundation is doing this for the people or what you do, but you end up with a trustee. Okay, so the trustee is the one that actually takes the funds and takes them away because of what they don't want. The companies, pension plans don't want the actual company having control of the money, or at least not all of the control of the money anyway. Because otherwise some company would, pardon me, would misuse the funds on something or another, and then all of a sudden, somebody goes to retire and there's no money there. Okay, but what you end up doing is often as not is saying how risky and what you want the pension funds to do, and it depends on the type of pension plan that you are actually running. If it's defined benefit, then the company does the investing, and no, the company directs the trustee to do the investing if it's defined benefit. But more often than not, it's now going to be a defined contribution plan. So what you end up with then is a bunch of people that are a bunch of different plans that people can choose in terms of their investments. So you have to know a little bit about it, but I would suspect it's the Community Foundation that's handling a lot of that for people. Correct me if I'm right or wrong, Adam, but that's generally how those things work.
Yeah, Dave, it's more for reserves. So it's not actually, I shouldn't have said pension plan. We don't do pension plans, but we for 56 years, we now manage $130 million and have a super diverse portfolio. And that diverse portfolio has earned just under 8% in our 56-year history, like earned over 10% in the last 5 years. So charities have the ability, instead of putting reserves in GICs, they can put some of the reserves into our big.
Into your fund. Okay, so that's a different thing. But
Yeah,
either way, either way, but you then
It's like-
as the community foundation are more interested in maximizing your
yeah,
without risk.
maximizing the returns. And it's as diverse as a pension plan is what I meant to say. Sorry.
Yeah.
So anyways, when you were talking
Either
about,
way, I mean, pension plans are the same thing. I mean, there's not-for-profits don't have them. Sorry for interrupting, Adam. But the pension plans are not there for staff as benefits in not-for-profits. And that's where you get into some of the more financing and then those activities is reserve funds and pension plans and that kind of stuff. But I wanted to make sure that people knew that when we're talking investing here, we're talking a broader scope. Okay. All right, let's dive into some budget stuff here. Okay. Now, here we go. All right. Formal written statement of the plans for a specific future time expressed in financial terms. Thank you, Mr. Webster. Okay. All right. Now, the most common, of course, is 1 year. Continuous budgets are another way that are out there. I have one little part of our organization that we do a continuous budget on. You know, Colleen, do you mind if I tell them who I'm working for?
No, go ahead.
Okay. I'm actually, my day job when I'm not doing teaching is as I'm the executive VP for finance and administration for CAA Saskatchewan. Okay. And it is actually a not-for-profit, believe it or not. Now it's actually split in two. It's a not-for-profit where you're doing all of the towing and all of those sorts of things. And the insurance and the travel and all of that is for profit. So there's a wholly owned subsidiary that the not-for-profit owns that runs all the for-profit stuff, and we pay taxes there the same as everybody else. Okay, so I kind of wear a couple of hats around here. Okay, but the nice thing about that is that it gives me the kind of broad things that I can see the similarities between the two, which is what we tried to get to talk about with this. There's a lot of this is just exactly the same. But we do a continuous budget on the towing thing. So we have basically what happens is 1 month comes on, 1 month goes off, and which just keeps going. But basically the length of time you want to look at this is going to be how long you want to have reliable estimates for. And let's face it, a budget is estimates. There's no question. All right. And I don't know about the rest of you folks, but my crystal ball rolled off the table and broke many years ago. So there's not much you can do about that anymore. You just don't know. I mean, you know, back in 2020 and about spring of 2020, would any of us have thought the year before when we were making our budget that the government was going to shut the place down? Okay. Thanks to a bug that got loose in the general population, right? So you don't really know, but most common is 1 year where you start to see longer terms of time with budgets is in things like strategic plans. So again, what we do is we do a strategic plan, and it is a continuous budgeting situation as well, because we drop 1 year off and add 1 year on all the time, but we're always looking at the 2 years past, the current year, and 4 years into the future. So our strategic plan has all those columns in it. And of course, the 4 years are the budgets, basically, in a very, very high level situation as to the plan of what we want to do. But we do a detailed budget for the board of directors every year that dovetails in with that strategic plan. Okay. Now, here we go. All right. The dichotomy of a budget is it's a communication device and it's a control device. All right. It has two things that it has to do. It has to communicate the expectations of the organization from all levels of the organization, up and down. So it depends how you build your budget, and we won't have time today to get into all the different ways that you build your budget. I'll touch on them a little bit, but not a lot. With that said, okay, if you build your budget rather granularly, like I do, because I've got half a dozen different business lines and 13 locations, and it's got to be built at a fairly grassroots level, and then add up and cascade up to the top. But it's still a two-way communication thing, because the board of directors tells the executive of the organization kind of what they want the direction of the organization to be. We kind of come up with some broad general brushstrokes. We communicate that down to all the organization, and then they figure out how they're going to do that and communicate it back, or whether they can't, or there's a back and forth thing going on here. But it communicates both ways. Now, it can promote some efficiency, because when you're actually doing your budget, there's always a bunch of I don't know how many times, because we don't do every area of the company in great level of detail every day, every year, I should say. But we do probably 60% of it in great level of detail every year, and then rotate the other 40% on an ongoing basis. So we would do one other area each year and leave 2 or 3 out, and then rotate that around. But it never seems to miss that every year we go through to do the budget, we find something that, well, why are we doing that? Okay, well, this looks like something we used to do years ago. Yeah, it was. Has anybody looked at this in the last 5 years? Well, no, not really. Is it really relevant anymore? Well, no, not really. Okay, so it promotes efficiency. Okay, you start to look at areas where you need to do this. Okay, I don't know how many times I've also looked at something and said, well, geez, that was a good idea at the time. And off you go. Okay, now I don't want to say that it's always finding bad things. Every once in a while, you'll find something that worked. And what you want to do is figure out why it worked and repeat it. Okay. Now, from a control perspective, though, it is an important performance evaluation tool. And it's not so much the budget itself that is the actual control device, it's the management reporting that drops out of budgeting and the accounting system that does that. So on the management side of accounting, what you do is you report what actually happened from your accounting system, and you compare that to your budget, and you get variances, right? Now, again, we won't have time to go through a lot on variances today, but what you're looking for is things that didn't go according to plan. All right. And you're not worried about $1.25 and 5 million. All right. You will have something in there where you will sit and say, okay, this is the threshold where we have to start digging in here and start finding what's going on. And again, good or bad. All right. If it's something that's working really, really well, how do we replicate that someplace else, or replicate it even within the program that's there? Or if it's something that's not going so well, what is our problem? Or is it one of those nice problems to have, which you see in not-for-profit all the time, where you have a program that's insanely popular, but is struggling because of the fact that you can't get enough funding for the number of people that you want to run through the program? So all of this is around the budgets and the management reporting that drops out of it. Okay. So again, you got the planning definition or dimension here. It does force people to look at something at least once a year and say, this is what you're going to do. Okay. And again, it definitely improves communication through all parts of the organization. Everybody knows what the goals of the organization are through the budget process or the strategic planning process, or both. Okay. And it creates some awareness of the overall operations and impact for people. And some of the external people will want to see this. Okay, not a lot, but some will want to know what's going on. And this is mainly large institutional funders and banks and things like that, because they want to make sure that if they're giving you your money, that you're using it for what it was intended. Now, as I said, okay, the control dimension, it's an objective. It gives you evaluations for performance for every level within your organization. Okay. It does have an early warning system sort of built into it. I was just recently up in Prince Albert doing a seminar for the Association of Friendship Centers. And we had a couple of hours that we were talking about this same thing. And they were struggling with how often they would see statements. And my comment to them is that you should probably do it at least quarterly, maybe more often, and compare it to your budget to see what's going on so that you get some early warning. Because if you wait till the end of the year and then you do a statement, if the horse is dead, it's too late to phone the vet. Okay, so that's what this budgeting process is all about. It's a planning document. It also gives us some control. It's also an information system, and it motivates people. All right. If people know what their expectations are of them, they usually try to meet them. Okay. I don't know very many people that walk up in the morning and get out of bed and walk into the bathroom and look in the mirror and say, I'm going to screw up today. Okay. I just don't know many people that come up with that kind of attitude. There's probably some, I just haven't met them. But most of us get out of bed and we've kind of sort of mentally gone through what we got to do for the day. And we got to, do I really want to do this today and face it or not? Maybe, maybe not. I don't know. But anyway, that's a different story. But it motivates us. We know what's expected. We try and make it. Or I make sure the boss knows in a real hurry if we're not going to. Okay. So again, corrective action can be taken, those sorts of things on the control side. And there's a whole definition out there called responsibility accounting. And basically what you're doing is making somebody responsible for an area, and you're giving them a certain number of variable costs to control and saying, here you go. Okay. Now, here we go. This is kind of just a slide. It's actually the whole thing that just summarizes what I've been talking about. Most organizations do some sort of strategic planning, or they should. And that strategic plan is the long-term objectives of the organization. Now, that's not going to change. I know that a lot of the things, again, because I worked for CNIB 30 years ago, a lot of the things that were out there at that time no longer need to be part of your organization anymore. For example, in those days, we used to have computer reading machines and things like that, and huge big monitors that were basically a television screen with a camera attached to it, and they were bulky and clunky and they were huge. Okay. But that's because nobody else in the computer world or the PC world in those days did anything along those lines. So we had these things and we sold them and we did some other things. Now I can change the resolution on my screen anytime I like. Okay. So if I'm a low vision person, which also is under CNIB, where they can still have some residual sight, it doesn't matter anymore. Okay. There's just a bunch of things out there that just aren't there anymore. But the long-term objective of ameliorating the condition of the people who have lost their sight for some reason or another is still there, and how they're doing it may have changed, but they go from there. And they have that in the strategic plan that gives the long-term objectives. The short-term objectives, of course, are buried in there as well, which becomes the short-term plan, which becomes your budget in any particular year. Okay. Now, what happens then, of course, is you start to do things. All right. So you take the budget and you monitor the activities of what's going on. You have a comparative actual plan. All right. If something's working or not working, you investigate and you correct it if need be. But you also feed that back, and it goes back in a circle, and around we go. So this is a very important part of how you actually manage whatever it is you're doing on a day-to-day basis. And often is not, particularly if you're a smaller not-for-profit, we get tied up in the day-to-day of just trying to make sure we keep our head above water. Okay. And you got 900 things coming at you every day. You got 600 demands. On a good day, you can maybe make 10. Okay. So it's all about making sure you just step back every once in a while and say, okay, let's have a look at this forest and make sure it's still got the same trees we wanted it to have in the first place. Okay, now normally this is going to be management activities. Now this is coming again out of a little bit out of the governance piece, which I know was a different piece here. So I don't want to go too much into governance. We'll talk a little bit about it, but not a lot. Okay. But basically the boards participate in these things. Again, it depends on the type of not-for-profit that you're running. Okay. Because not-for-profits run the gamut from half a dozen guys getting together to run a soccer tournament for a bunch of kids. Okay. So then the board of directors is the management. All right. All the way to something like CAA Saskatchewan, which basically is a not-for-profit, but is the not-for-profit part of CAA Saskatchewan is about $28 million. Okay. So it's fairly big. Okay. As far as not-for-profits go. Now, I mean, there's lots of charities and everything, and they're way huge more than that, but you got to remember we're in one of those geographic territory here. But nevertheless, that aside, it runs more like a business than when I was involved with my kids and doing things when whatever they were doing. Okay, so this is going to be different, depends on what you're going to do. But the boards basically set what's going on, and then whoever is managing it, be that the people that are the same people, or whether it's the management that are hired by the board of directors, are going to be there and go from there. And then any variances from this budget are, of course, going to be monitored by the board as their fiduciary responsibility, but it will be the responsibility of manager to get it going. Okay. Now, most of this is accomplished through a reporting system, which is, of course, financial management and the statements and the schedules and management report. Now, the reason I'm throwing this in here, and the reason I'm throwing this in here is it's a single slide. But what I don't want to bore you all with looking at income statements and statements of financial positions and all those sorts of things, because most of you have probably seen them before and you know how to read them. Okay. So what I want this in here though for is that to draw in again the fact that there is a difference between financial accounting and management accounting. Financial accounting is all of the statements, no doubt. Okay. But they're prepared according to the various generally accepted accounting principles and all of those sorts of things. So there's a quotes rules that they're not really rules, they're guidelines more than rules, but nevertheless, there's a whole bunch of things out there that basically dictate what those things will look like. And there's reasons for that, of course, because if I want to compare year over year or two different organizations or anything like that, well, then, you know, I have to know that the statements were prepared more or less the same way. Management, on the other hand, we can budget for the number of people going through the program. Okay. We don't have to necessarily budget in dollars all the time. We can budget in just about anything we like. And the reason is because management reports will carry financial information, they'll carry budget information, and they may well also carry statistical information. Okay. Because it's all well and good to say, well, I made my budget. Okay. I was supposed to spend $10,000. I spent $10,000. Okay. However, if the original budget was made to do 50 people, okay, then that means, pardon me, I was planning on spending $200 per person on this program. Okay. Now, if I only did 10 people, then I really actually overspent quite a bit. Okay. And if I managed to do 100 people, good on you, but where did you cut the corners? Okay. So just making the budget doesn't necessarily mean that this was a good idea. Okay, so that's why you get a reporting system that does a lot more things than this with the management reports. It usually carries financial information from the actuals. It usually carries budget information. It talks about what's different. And then it usually also has statistical information that we can also budget for. Okay. And most people don't think about budgets in that way when they're looking at them. All right. it's all well and good to make the budget, but did we actually accomplish the goal that the budget was set out to do at the same time? So that's the reporting system. Again, before we get into some types of budgets and things like that and some examples, are there any questions on the kind of duality of budgets in terms of the communication and control and the fact that you need a reporting system to actually make the budget effective? It's no use making a budget, sitting it on the shelf and watching it gather dust. I realize I may be, depending on what you people do, I may be telling you a lot of things you already know, but I'm just trying to set some basic things here. Okay, operating capital and cash budgets are what we're looking at. Now, I noted this earlier. Okay, the operating is day to day. The capital is the purchase, sale, and retirement of long-term assets. And cash is planning for the cash flow fluctuations. What is money coming in and what money is going out? So we're going to look at 3 different types of budgets here and go from there. Okay, now the typical operating budget is a pro forma income statement. Basically, whatever we're normally reporting in the financial statements, so we're going to do it on the budget level, although it's likely going to be in more detail. Okay. All right. And it may include sales if you actually sell things. Okay. And it's developed from a revenue or a sales forecast. In other words, we have to go through and look at what are our sources of revenue and where is it coming from? What are the amounts? All of those sorts of things. Okay. Now the program budgets are going to be the next thing. All right. And in part are going to be developed from your revenue budget, because obviously if you get a grant from one of the levels of government to do a particular program, then you better be doing the program. Okay. They get really annoyed when you spend their money on something that you weren't supposed to. And so there we go. Okay. Now it yields a materials budget. It may yield a labor budget. It may have some overhead, which is depreciation and occupancy costs, which could be everything from rent to utilities to building maintenance. It could be all of those things. Okay, if we actually do sell something, and again, I go back to my CNIB days, because we did have a little store going on at that time, because a lot of the things that worked well for people with low vision or no vision weren't sold at Walmart. 30 years ago, they didn't do that kind of thing. A lot of it is actually available on the open market now, particularly online. But in those days, there was no internet. Okay, I'm dating myself again, I know. But we did sell stuff. Okay, so we had cost of goods sold. And usually you have an administrative expense budget. Now, what I'm going to say for people, Pauline, this thought just popped into my head. There is a series of examples that I did in NSLI 350 on Excel spreadsheets that we could probably make available for people if we want them. Okay, I'll make a note so I don't forget to get them to you.
Sure, I can send that out with the recording, Dave, because I think that's definitely something that folks would be interested in. I find that practical tools are always really helpful,
Yeah.
particularly for, I mean, for everyone, but really like a lot of organizations, folks on this call have, you know, small to medium-sized nonprofits and might also be board members and volunteers that are doing a little bit of those kinds of budgets as well. So those tools I think would be really helpful.
Yeah, I'll get that together. It might not be this afternoon. I've got a bunch of stuff going on. But it might be tomorrow morning, but I'll just pull them from the website and sort them out a little bit and go from there and get them to you. Okay. All right. So a capital budget, again, is pro forma balance sheet items and it's long-term physical assets. And we've all seen this. Okay, you know, if you need a vehicle for your program, well, then you got to buy one once in a while. And you may be going out to get donations for it. And you may get a service club to buy it for you, or you may get all kinds of things happen, but it's still there. Okay. And it may include some financing, particularly if it's a large project. Again, when I was with CNIB, we rebuilt the Saskatoon Service Center while I was there. And we had raised about 2/3 of the money, and we got a mortgage for the other third, built the place, and then proceeded to pay the mortgage off early. But nevertheless, with donations and one thing another, but still there was some financing involved there. And then a cash budget is cash receipts and cash disbursements and any finance if the receipts are less than the disbursements. Okay, how do we go about making one of these animals? Now, again, as I've said along a couple of times here, these things are usually developed at a high level of detail and may be summarized for the board of directors. Again, I go back to my own personal situation here at CAA. We have 4,000 accounts in our chart of accounts for the various things that we do. The board of directors isn't interested in seeing 4,000 lines in the budget. All right. In fact, frankly, neither am I. But we do actually budget at a level of probably 3/4 of them. And that's the level of detail that's out there. Okay, there are some of the balance sheet accounts that we don't bother to budget for because they're doing various things, but that are just not, there's no value in actually doing a budget for them. But most of the rest of it, there is a budget for. So it gets highly summarized when it gets to the board. They don't want to see that kind of detail. That said, for me to be able to go to the manager of the branch in Prince Albert and say that your travel part of your organization is not functioning quite how it should be, or is, or whatnot, I have to have that level of detail. Okay. All right. So if you've got something in your financial statements, it's usually going to be there in the budget. Now, you usually look at a couple of prior years' data and forecast the current year and then try to determine the next year. So we've all done this. All right. We looked at what's happened over the last couple of years and we say, okay, well, we're trending up 3%. It's about the same this year in terms of this. Again, take salaries, for example. If you have two people working in a program, you know what they make. You know what they've made for the last 2 years. We plan on giving them a raise this year and maybe next year as well, so we can determine what's going on. Okay, and we do that for everything that we can do, but it still ends up being an estimate for the following year. Now, there's some good and bad to that. So you may have heard the term zero-based budgeting. Zero-based budgeting goes back and says, well, wait a minute, if you started from nothing, what would you do? Okay, and that's part of the efficiency piece of this, because the danger in just looking at the last couple of years and moving forward is if there's a mistake built into the last couple of years, we perpetuate it. Okay, and we build in any changes, and then of course we summarize it for our board of directors. All right, now the accounts, as I said, we're going to go back to the accounting detail and work from there. And of course, your chart of accounts designed to support whatever management system you have. Now, I don't want to get into this. This is an accounting topic, but you actually have to have a place to charge things in the accounting system or to put the revenue and all of those. And you're going to have a level of detail in all of there that you need in this thing. And basically, the chart of accounts is just simply a list of all the accounts in the system. And you want to design it so that you can actually do some things. So for example, we have three different organizations here. So the first 4 digits in our chart of accounts in an account number designate which organization it's in. The next one is the division. The next one is the branch. And then the final one talks about what it is. Okay. So be it salaries or rent or office supplies or cats, bats, rats, whatever it happens to be. Okay. But I'm going to now take each one of the accounts in the chart of accounts, and I'm probably going to budget most of them. Okay. So that's your starting point. You're basically going back to your accounting system and saying, okay, this is the accounts that we're using. And that means we have to have a budget for every one of the accounts that we're currently using. And of course, you look at that and you say, wait a minute, we're going to new programs, we're going to have to add a few things, or this program's gone away, so we don't have to worry about that anymore. And just basically look through it and make your projections moving forward. Okay. Now the cash budget, okay. Oh, good. That slide shouldn't be there, but anyway, obviously my edits didn't work quite what they looked like. Anyway, here's an operating. Okay, so again, you can see this went in here. All right, an operating budget. We would look at a couple of years, project a year, and then project what's going to happen in the following year. And you can see it's going to be all of the revenues and all of the various things. Okay, there's a couple of ways to do this. This is kind of the high level one that I wanted to show you and go from there. Now, this is a program budget. Okay, this is a program budget. Now, Colleen, this is the things that I was talking about. I have two pieces here. I have these slides which show how this all goes together as a spreadsheet on NSLI 350, and I have a set of Excel spreadsheets that actually has that we used as examples, practice examples. So that's what I'll get to you. Okay. But this is program one. So program one has these direct donations. Now you can see that there's a deficit in this program. So for whatever reason, we're deciding to do whatever we're doing in this program, we haven't got it fully funded. And by going back to that most granular level, we see this. So now we go out to the fundraising guy and we say, okay, look, you know, this program needs some work. So you better get working on the donation side, or we have to do something else. Okay, which you wouldn't see when you get to the end and the whole thing is summarized. Now, obviously, we have to pay the bills. So this 12,000, 13, et cetera, is going to have to be funded from someplace. So there may be some other general donations. That's why I used the word direct here. Okay, because in this example, what we have is direct donations to the programs that you have to spend on that program. But what we also have is general donations, which we can use to subsidize the fact that we don't have enough direct funding to cover everything that's going on in this program. Okay. Now, again, we do it for program two. We get the same sort of thing. All right. Now, this one has other in there. So obviously what's happening here is we've got something else going on. Now, what I wanted to illustrate here is this is a program that has donations. It may have some grants, but maybe we collect $10 a head every night that this thing operates or something like that. You know, some nominal fee from the people that are participating in the program. Okay. Or we try and catch part of the cost of the program supplies or something like that. Okay. So this one didn't have a lot of that, but this one has a little more. So the idea between the two program budgets here is just to show you you can do things in different combinations. But that's what the other is. It's just miscellaneous, whatever you got. Again, we've got a deficit here. Now we've got a general operating budget, admin in general. So now you can see we've got a whole bunch of general donations here. Okay. So it looks like, well, wait a minute, we make money at the general and admin level, okay, because we get some grants to do some stuff there. We got other revenue coming in, Lord knows what it is. We got all kinds of things going on here. But you see, we were short 12 and 14. We made it up here, okay, because what we use is general donations to cover the programs. However, okay, we do these budgets at this most granular level simply so that we can make sure that we're getting the maximum out of what's going on in here. Okay. So you can see why the budget has to be at the most granular level that it's going to be on. Okay. So again, we would put this whole thing together a total at the end, and what would happen is as you can see, we made some money this year, we didn't that year, we didn't this year, we're planning on getting back into the black next year. Okay, 2020, this was deliberate because of course that was the pandemic year. Everybody suffered that year. So what would have happened is we would have had to have had some reserve funds that Adam had invested for us someplace. Okay, to bring in to cover off that particular year and maybe even part of this year till we got it back again. Okay, so again, part of the management of the overall organization, but I'll talk more about that when we get to the cash budget. But you can see what's happening here. We do the budget operationally. It's just basically revenues and expenses, whatever they happen to be. We do it at the most granular level so that we know what's going on at the most granular level, because now we can go back to this person that's running this program and say, well, wait a minute, okay, we either have to scale it back or we do something, right? Okay, or it can continue running the way it is, or we have to do some more fundraising, whatever, okay? The communications piece of the budget then becomes the fact that this program does this program does something else. The admin and general side is that. It appears we're making money there, but all we're doing really is putting it back into these programs. Now, some organizations would actually allocate this money right off the bat. They wouldn't bother, okay? But this is just meant to show you one way that this could happen. Okay, now before we go on to the next type of budget, are there any questions on that from a grand overview point of view, shall we say? I'm thinking this one is the most familiar to most people. Okay, capital budget typically looks like something like this. It's going to be on a item by item basis. Okay, these are large items. They're going to stick around for a few years. So I need a computer system, I need a building, I need whatever. Okay, a bunch of office furniture, you name it. All right. Now we may have funding for it. You know, we might get a grant from a foundation to do part of the building or whatever it happens to be. Or we may have to go out and raise donations, but whatever it is, we're going to have to do this. Okay. And of course, we've got the cost and expected useful life, those sorts of things. So the capital budget's usually fairly straightforward because it's big items. Any questions on that one? Okay, now this is the one that I like to say is the one that it gets neglected the most. Okay, so what's happening here is, you can see what's happening here is this is the donations as they come in over each month. You pretty much got to do this one a month at a time. And this is the grants. Now the grants tend to be a little more stable, although something's happening in here where they're getting a grant for a specific program, maybe a summer program or something like that. Okay, and then the other kind of percolates along. But if you look at this thing, it's pretty seasonal. Okay, December is big month. You know, a couple of months in the summer are a little bigger. You're a little dry in August. Okay, all right, we don't have a lot of money coming in. Then we start looking at what's going out. Okay, so supplies are going to be, again, if this is a thing that's not centered in the summer, is what this illustrates. You're gonna have more going out in the winter months. Now your staffing a lot of times tends to stay fairly stable. Okay, and the reason is because we don't, our people may be working their tails off in January and they take holidays in July, but we still got to pay them. Okay, so what's happening here is you usually end up with your salaries being relatively stable. Okay, you may have some seasonal employees, people that work for 4 or 5 months a year and then take the summer off or something, or the other way around. You might have a bunch of students for 4 months. Okay, so this could go up and down. But what I'm trying to illustrate with this one is something where the salaries stay relatively the same all the way through. And same thing with this other, because this other is your rent, your utilities, maintenance, janitorial, all those sorts of things goes in under other, but we do have to spend that money pretty much all the time. I put a little extra in December for snow removal. Okay, but basically you got cash coming in, you got cash going out. Now what's happening here is you get a net cash position. So in January, we put out more than we brought in. Okay, in February, we did the same thing. Okay, in March, for whatever reason, okay, the grant funding came up, we got some donations, so maybe we got paid after the fact for some stuff that happened in January, February. We've got excess money. Okay, so we pay off some of the 59,000 that we've accumulated in debt up till now. Now, where would we be accumulating this debt? This would be in our line of credit from the bank or something like that. Okay. April, in the ditch again. Why? Because we bought something from a capital item. Okay, spent 50,000 on a 10-passenger van or something like that. Actually, you'd spend more than that, I think, on that now. But anyway, okay, cash going out. So now we're 95 in the ditch. Okay, next couple of months we get caught up again with some of the grant money. You know, things like that come back. So we got some excess cash. We can pay down our line of credit. July, we get into our summer programs. August, definitely the month where we starve. Okay, September, things are just ramping up again, so we're still starving. But by October, we start to pick up again and we have money. And at the end, we pay for everything that we did, one way or another. So this cash budget is all about where did the money come from? Where did it go to? This is a lot of it. It comes from all the budgets, okay? This is all the donations, grants, and other, whether they're capital or whether they're operating. This is the supplies, salaries, and those sorts of things, which is mainly operating. Capital, of course, is that. Again, other is likely mainly operating. And then what we need to do with when we need the money is the financing piece of it. Again, are there any questions on that one? Hopefully you can see what I'm talking about here. If you need to know when the money is coming in and out so that you make sure it's available for when you do.
I feel like I had like a multi-year grant and then like the payments came in not at the same time that I would be doing the work. And I wish I had this template because it was such a struggle for me, honestly. But this would have been an amazing template. Yeah.
There you go, Colleen. You'll have to take your own damn course.
I know, right? Because like I'm sure that others like the smaller size nonprofits, this is like, you know, sometimes things, the activities don't line up directly with the month.
Yep.
And that's,
and you can take something like this to a banker and say, well, look, you know, can you, you know, we'll pay, but by such and such a time, and they'll have their rules. They don't just give away money willy-nilly, obviously, but they will fund this kind of stuff.
Mhm. That's really helpful.
The reason I know is because I've got $2 million worth of overdraft protection, because in December and January we have towing money going out of here like water.
That makes sense. Yeah.
Okay, now after approval, okay, we tend to set the budget at the end of 1 year for the next year. And like I mentioned earlier, none of us would have planned on some bug getting loose in the population and cutting us all down for 3 months or 4 months and or more or longer in 20 and 21. So things can change. Okay. Now there's an industry concept out there called flexible budgeting that looks at unit sales prices and unit costs. That's another one that's out there. But usually what you want to make sure is after approval, you've got some methodology of going back to your board of directors and changing things. Like, for example, our board of directors allows us to move money around in certain budget areas, not all, but certain budget areas we're allowed to move money around up to $100,000. Now that sounds like a big deal, but then you got to remember we're looking at a $45 million organization by the time all is said and done. So it's not as big as it sounds, but it means I have to meet the bottom line of the budget more than I have to meet the actual individual categories. That said, over a certain level, I have to go back to the board of directors for their approval. And there's more control than that on it. I mean, there's certain things we can't move money around for. So in other words, we can't move money out of operations into capital and the other way around, things like that. But this flexible process is what I wanted to really talk a little bit about, because often as not, we have a lot of times when we actually have our budget, and this is why I was saying that we needed to know things more than just the dollars, is because oftentimes we're running a program, like I say, you got a little program for after school, and we designed it around having 15 kids in it, and it was going to cost us X number of dollars, so we knew it was that much dollars per kid. So let's say it was going to cost us $200 a kid for this program. Okay. And when we get to the next section, which is around the performance and that variances stuff, I just wanted to touch on that a little bit before we leave it. But what happens there is again, you may have 15 kids, you may have 20, you may have 6. So the actual budget, the actual $10,000 budget that you had for that program, if that's what it was, if it was 200 a kid at 15, it'd be 3,000. But nevertheless, that number may or may not have any relevance. Okay. And you may have to go back to your board of directors and say, well, look, wait a minute, we budgeted $3,000 for this. We ain't going to make it because we got 20 kids. Okay. And you want us to do this. Where would you like us to get the budget money for to pay for the rest of it? Because now we got a $4,000 net need and a $3,000 budget. Okay. And then of course, conversely, you could have 6 kids in there, and then all of a sudden you shouldn't be spending $3,000. You should be spending, more like $1,200. Okay. So you get this concept of flexible budgeting, which is a reporting thing. And what you do is you report based on the actual volume used, not necessarily the original budget number. Now, this is a whole thing on variances on itself. So what's happening here, okay, is we'll look again at what I'm talking about when I'm talking about variances in a second. But what's happening here is there's got to be some give and take. Okay. So from a governance perspective, whatever you make, obviously we all have to live within our means some way or another. It seems to be only the federal and provincial governments that can work in debt forever and get away with it. But anyway, you can have interim budget revisions and make sure your board's aware of what's going on and all those sorts of things. And make sure you have some flexibility built into the project one way or another, so that you live within your means. But having said that, you're not walking into every battle with one hand tied behind your back. Any questions before we talk a little bit about the performance side of this thing? Okay, so how do we do this? Okay, now, so back to control. All right, so to get the performance reporting. Now, I'm going to talk about numbers and dollars here, but remember, as I said, a lot of these reports are internal management reports, and they can have statistical stuff on them as well. Okay, and again, I go back to my own person. I know how much it costs me to tow a vehicle on a unit level. I just don't have any idea how many days it's going to be really cold every year. So where I have to go after the performance management of the people that run the emergency road service is not so much the actual dollars that they spend. Yeah, I got to find the cash for that, no question. But if they're controlling their organization, it's highly dependent on how many people phone up and need a tow. Okay. And on a cold day, that can be 1,500, 2,000 people. On a real warm day, it can be 250. All right. So over a period of time, though, there's going to be some averaging that goes on. And that's what we end up looking at, is saying, okay, if you did this many tows, it should have cost you this much money. where are we at? So that's that whole concept of flexible budgeting. And I'm not going to get too deep into that, but here's what the kind of the theory behind the control side of a budget actually is. So you can hear this, we've got some revenues, we got some budget. You can see these guys were way behind for some reason. Okay. Now, all this really does is point at a problem. All right. Because we obviously had less revenue. We shouldn't have spent as much money on the cost of whatever it takes to generate this revenue. So the fact that we've got less revenue is one thing, and the fact that we spent less, that's the unfavorable and the favorable piece here, okay, is fine. Okay. The trick to this is to find out if it shouldn't have been more or less. Now, of course, the fixed costs stayed the same. All right. Now we were planning on making $12,000. We lost 5,600. Now, if I look at this 152.6 is just over 70% of the sales. When we budgeted it, 96,200, it was supposed to be 70%, so we're probably in pretty good shape here. Okay, but that's what I can find out by comparing one of these to the other. All right, so an unfavorable variance. Now, an unfavorable variance depends on what you're looking at. Okay, it's less revenue or more expense, and a favorable variance is more revenue and less expense. Now, how we do this is impact on the bottom line. So an unfavorable variance is going to be one that decreases the bottom line. So, of course, less revenue or more expense. And a favorable variance is going to be one that increases the bottom line. So, again, more revenue or less expense. Okay. And what we have to do is take actual costs and revenues, compare them to the expected costs and revenues. Okay. And go from there. Now, it's interpretation that's really the key part to this. Okay. Why is it different? Okay. What triggers a decision to investigate it? When is the variance significant? As I said, if you're looking for $1.25, okay, in 50 million, you're wasting your time. Okay. Now, if you're looking for 50,000 and 100,000, you're not wasting your time anymore. Okay. So it's all about figuring out what's going on. Okay. And are there any consequences for not meeting the budget? All right. And this is all the hallmarks of management accounting reporting. Okay. Okay. Why is it different? First of all, identifying that it's different, which is what I was talking about back here. Okay. All of this stuff. We've identified something's wrong. Okay. Something's good, something's wrong. Okay. So we identify it. We try and figure out why. Okay. We don't want to investigate every one of them. So what triggers our investigation? Okay. Like when is a variance significant? And are there any consequences for not meeting the budget? And there usually are. If nothing else, the boss is annoyed. Okay. So you get a few accounting concepts going in here. Again, all right, materiality, I already talked about. Okay, that's how much money it is. Cost versus benefit. Okay. I can spend $5,000 looking for $2,000, and we wouldn't want to do that. Okay. So again, all of this is part of it. What are we looking for? And off we go. All right. And often it's not what you want to end up with is some sort of a rule of thumb that says, okay, we're going to do all variances exceeding $5,000 or 25% of expected costs, whichever is the same, or, so you'll have something there that you can do this. So you manage this by exception. So we go back through this, we do the actual manager report, and we go here. Okay. And as one of these things, whether they're favorable or unfavorable, you're going to get differences from time to time, no matter. Okay. That said, what's going to trigger this? So you're going to do management by exception. You're going to hit some sort of an exception that says, go back and look at this one, good or bad. Okay. And then, of course, you get the control. Now, the last slide that I have here is, of course, responsibility accounting, which goes into identifying, once you've identified that there is a problem or there's something good going on, and you've identified why, okay, part of the process of getting there is, of course, identifying it in the first place, but then who's responsible for that so we can go out and find the cause and fix it, okay? And it gives you, as I showed you in that slide way back when, feedback for any future planning. If we're looking at our program and we're basically saying, well, we planned on $10,000 and 15 kids in this program, and we're going to constantly get 20 kids, well, we better be doing something. Okay, the board of directors wants us to say, you know, they don't want us to be turning kids away. You know, it's a meal program or something like that. So they don't want us to be turning kids away, because if you turn the kid away, he goes hungry. Well, that's not what you're about, right? So feed them somehow. All right, then how are we going to do this? Okay, so this budget program goes through and says, this is what we plan to do. The real benefit out of that is planning. Of course, it focuses everybody on what you want to do. But then the secondary control side of it says, and I don't mean control from a draconian point of view, but the control side of this thing says, all right, this is what's happened. This is what you thought would happen. These are the differences. Who's responsible for those differences? Why did they happen? Do we need to do something about it? So that's my hour or so speech. And hopefully there's been a few pearls of wisdom to go through there. And as I said, I'll get some examples to Colleen that she can distribute on the more nuts and bolts of this thing. And go from there. But unless anybody has any questions, we'll go from there.
Wonderful. We have a couple minutes here, so I'm happy to stay on and stay if people have specific questions, and then also follow up with some resources for folks as well. I hope you're seeing the messages in the chat, Dave, as well. Some people had to leave.
Yeah, people had to disappear, but that's life. Welcome to it.
Yeah, absolutely. But no, I just want to thank you, Dave. And I know for me, I don't specifically work in like in an executive director position, obviously, of oversight, but navigating grants and budgets and these things, there are so many folks in the nonprofit sector that are trained to do the work specific to the mandate that they're delivering, right?
Mhm.
And so this world of nonprofit budgeting and accounting, I think the 101 for me anyways is great, because it helps get us that foundation. And yeah, I'm really appreciative of that, and for your expertise, Dave, and for the work that you do, both to support community through our courses and just your willingness to do this this session so that we can all benefit from that knowledge as well. I really appreciate the practicality of it as well. So thank you, Dave, and thanks to everyone who's been here and spent the time with us this morning. It's always a pleasure to be together on Zoom and in any space, but glad that we could be together on this Monday morning. And yeah, I'm happy to hang around for a few minutes if that's okay with you, Dave. And if anyone has specific questions or might want to connect with you, graciously offered to connect with folks as well if they had some specific questions or something that they're working through, which is so kind of you. But anyone else that has to kind of take off and go on their Monday, I thank you for being here. Thanks again to South Sask for their support. Check out our last session of this series for the spring, which is coming up next Tuesday. And I hope you all have a wonderful day.